Most landlords are bleeding money every single month, and they have absolutely no idea it's happening. We're not talking about a slow drip. We're talking about thousands of dollars a year disappearing into emergency repairs, missed warranties, and contractor markups that a simple system could have prevented. The dirty secret of real estate investing isn't finding the deal, it's what happens after you close. Most investors spend months analyzing cap rates and cash-on-cash returns, then completely wing it once the tenant moves in and something breaks at 2 in the morning. Here's the catalyst nobody talks about at the real estate meetup. Deferred maintenance compounds exactly like debt does. One ignored HVAC filter becomes a failed compressor, which becomes a $5,000 emergency call on the hottest weekend in July, and your tenant is now posting reviews online. Think of your rental portfolio like a fleet of vehicles where you skipped every oil change because you were too busy. The engine doesn't ask for permission before it seizes, it just seizes, and suddenly your cash-flowing asset is a cash-bleeding liability. A few years ago, the real estate investing world was obsessed with acquisition. Acquisition, buy the next door, scale the portfolio, get on the podcast. Now, with higher interest rates and tighter margins, operators who ignored maintenance systems are getting absolutely humbled by the operational reality of owning physical assets. The psychological shift here is real, and it's uncomfortable. Investors who once felt invincible watching their equity grow are now white-knuckling through repair estimates. But the investors who built proactive maintenance tracking systems, they're sleeping fine, raising rents confidently, and protecting margins that everyone else is watching evaporate. Historically, the investors who survived every market cycle, the 1980s interest rate shock, the 2008 collapse, the pandemic chaos, weren't always the ones who bought best. They were the ones who operated best. A well-maintained property retains tenants longer, commands higher rents, and sells at a premium every single time, across every single cycle. The misconception we need to destroy right now is that maintenance tracking is just a spreadsheet for neat freaks or property managers with too much free time. In reality, a proper system, whether that's Property Meld, Buildium, or even a disciplined Google Sheet with scheduled reminders, is a profit protection tool disguised as an administrative task. The system works like this. You document every appliance with its age, warranty, and expected replacement window. You schedule seasonal inspections like clockwork, and you build a reserve fund calibrated to your property's actual condition, not some generic 1% of value rule that ignores whether your roof is 2 years old or 20. When you know your water heater is entering year 8 of a 10-year lifespan, you budget and shop on your timeline, not the timeline of a flooded basement at midnight. The practical lesson from every seasoned operator is embarrassingly simple. Preventive maintenance costs roughly 20 to 30% of what reactive emergency repairs cost for the same underlying problem. You are not saving money by ignoring the slow leak under the sink. You are financing a future mold remediation project at a punishing emotional markup. Discipline here looks like quarterly walkthroughs logged in your system, annual HVAC servicing scheduled before summer, and a vendor relationship built before you need it desperately. The investor who calls their plumber in January, not because anything is broken, but to stay sharp on pricing and availability, will never pay the desperation premium that destroys monthly cash flow. Position size matters here too. Don't over-leverage your portfolio to the point where one major capital expenditure wipes out 6 months of reserves, because the system only works if you have the financial runway to act on what the system tells you. A maintenance tracking system without an adequate reserve fund is just a very organized way to watch problems you can see coming hit you anyway. At the philosophical level, real estate wealth is not built in the acquisition, it's preserved in the operation. And the operators who compound quietly through discipline, consistency, and process almost always outlast the ones chasing the next deal without minding the assets they already own. The boring spreadsheet, the scheduled reminder, the proactive vendor call that is the real alpha hiding in plain sight. We can absolutely get comfortable with whatever the market does next, because a well-maintained, well-documented property performs across conditions, it attracts quality tenants in soft markets, commands premium rents in strong ones, and sells cleanly whenever you decide to exit. Preparation is the only strategy that works in every scenario, and your maintenance system is the foundation of that preparation. Whether you're ready to start investing, need a trusted contractor to assess your current properties, or want to connect with lenders who understand the operational side of real estate, check out our links in the description below, and let's build something that actually lasts.